Hey everybody, this is David Skriga. Sorry for it's dark. I'm going to do mostly sharing the screen anyhow. Yeah, I know it's been a long time since I've done anything. I've talked about restructuring my service. Hope you like my house. There you go. Pretty cool. My house kind of looks like a bar or a uh, um, club at night. And also, you know what, man? I highly recommend the LED lights. They're very soothing. So anyhow, I'm about to relaunch the service in February, so Monday, make it much more interactive, more videos like this, more podcasts, etc. When I do these videos, I'll do some live, and you can join the chat and talk to me, ask me questions live. Obviously, be respectful and the whatnot. So, but this is gonna be one of the most important videos I've ever done, and like I said, I'm going to share the screen, so you're not going to just see my neon lights. And so we obviously know what's happened today with all of these shares, the Google Chrome right here. So yeah, we all know what's kind of happened with these stocks and with what's going on in the market, right? And we've, this is Fizz right here. This was actually a stock I was short a few years ago. Luckily, not anymore. This is, first of all, we're going to talk about this. So I have a different angle and I think a different conclusion. And why I think this is really bad, what's going on in terms of for the market. Now, I actually added some shorts, which I'll talk about in a second. So what's going on? First of all, the thing is, first of all, I know everyone wants to blame Wall Street, and there's blame everywhere. We know what Wall Street is like. We know they're basically a bunch of dirtbags. What we're seeing is, So what we're seeing here in the markets is, these Reddit traders have now kind of cornered all these short stocks. Now, the reason why there's short positions on these stocks, I was short Fizz because Fizz is a garbage company. The product isn't very good. I love sparkling water. No one loves Perrier and Pellegrino more than me, and even a simple club soda, right? I highly recommend the Orange Crush. They have these little things you can squeeze. The little squeeze things in a club soda tastes like an Orange Crush, no sugar. But anyhow, their product is this. They have a mediocre product, in my opinion, and the stock is completely crazy and all that kind of shit, and let me see, this is Fizz right here. Look at the disaster. So look how crazy it is. So yeah, when it was going parabolic, I looked parabolic back then. I got the log seal off. So yeah. That's why I shorted it. And I kind of gave up shorting since. That's why you haven't heard a lot from me other than the deals that I'm doing since the bottom last spring. Because I figured with all the liquidity, all the money being printed, all the cheap money, etc., the market was going to go on a tear. Now I started adding to shorts the last few days, and I was about to just recommend some. Obviously, I prefer you buy them on bounces, but I'm going to tell you why I think this is so dangerous to the market. But this is the garbage company. It's way overvalued, et cetera, et cetera. So people got to stop saying that it's like somehow these Reddit traders, are, I don't know, some kind of, saviors of capitalism. No, they're squeezing short positions. And a lot of these companies are short. People are short in these companies because they're garbage. So they're basically squeezing short positions in garbage companies. This is, again, the effect of cheap money. People spending their stimulus checks, their unemployment checks, all the trillions the Fed has printed. Money is nothing. People think that the Fed is going to be loose forever. Market will go up forever. So this is what they're doing, right? So, and of course, the big one right now is, and I just think this is just, again, the symbol that we're near now the end of the bubble. This is GameStop. Absolutely the most insane chart I think I've ever seen on anything, period. The stock went from 30 to 350, and it actually was like 12 or 13 to start the year. So here's the issue with it right now. So this is a fund that did Melvin Capital, which did a lot of shorting, and they're already down 30% this year. And, Steve Cohen, who kind of founded the fund and is a partner with the fund, he's now like giving them, bailout money, right? So that's what we're kind of seeing right now in this kind of madness. So here's the way hedge funds work. So this is why I think this is an important video. What I'm going to tell you now is that, so the way hedge fund work is they're long short. So let's say, just for argument's sake, to make the number easy, you have a fund that manages $1 billion, right? If you manage $1 billion, you might have 50% short, 50% long, right? Usually these funds use 3 to 1 leverage, something in that range, because they have a bunch of small positions. They're long short, so they're hedged against supposed market risk, and they're not going to blow themselves up. And it's like, and if the market goes down, is in a bear market, the shorts will make money. If the market booms, the longs will make money. And they're just trying to make 10, 20, 30% a year, that sort of thing, right? But the issue is this: if you are short, the problem with shorting as opposed to being long, a long can only go down 100%. So let's say you have 1% of your fund in a long that goes bankrupt. You lose that 1%. If you're leveraged 2 to 1, you lose 2%, right? That's not, it's kind of like me when I buy puts. If I put 2 or 3% of my money into puts and I'm hedging myself, if I lose that 2-3%, it's hopefully because my longs are up 30 or 40%. And who cares about the puts losing 2-3% of my portfolio, right? The problem with shorting something like GameStop, if you're short, and I'm going to get a shorter term chart here. Actually, probably a year won't. I'm just going to get a month so we can see this move. So when you're parabolic on a month chart, that's pretty ridiculous. But anyhow, so if you're short here to start the year, whatever, $12, $13, and this thing goes to 350, you've lost 20 or 30 times your money. So let's say 1% again of your fund is short GameStop, right? Well, that loss becomes, 30%, because you're short of, every 10 million on $1 billion position is now down 300 million, right? And then if you're leveraged 2 to 1, you're down 600 million, you're down 60%. So what's going to happen is, again, now we're seeing these companies basically starting to, cover and cover their positions in these things, right? So, okay, that's the one thing, right? So you're covering your position in GameStop or whatever thing. But what happens after that? If you're down 50 or 60% in your hedge fund, you're going to probably get mass liquidations, mass redemptions. You're going to have to start selling positions. And guess what? That's AstraZeneca. These funds, they all own Amazon, they all own Google, they all own Apple, they all own these big momentum stocks that have been going higher. So, stuff that's in the NASDAQ 100, for example, right? So what's going to essentially happen is, right now it's no big deal. The market was down 3% today, right? Who knows? Maybe it'll go right back up to another high. But what's going to happen, in my opinion, is as this slowly unfolds, these guys are going to have to cover their shorts, and then they're going to get redemptions, and then they're going to have to liquidate, and then that could cause a cascade of selling in the market, and which is grossly overvalued anyhow. And the ironic thing is, all these Reddit people that are cheering, these stocks being shorted and causing the shorts to cover, what's going to happen is those shorts cover, blows up these funds. These funds then have to liquidate everything. It crashes the market, then it screws over all the Reddit people. So essentially, in the long run, a lot of these Reddit people are just blowing themselves up in the market, right? So, and in terms of like my belief on this, I think both sides are essentially in the wrong. I think the Reddit people are complete morons. They know nothing about markets. Okay, whatever, they made some money, but all of us at times, especially when I was a novice, I made money and I really didn't know what I was doing when I first started. And I think obviously these hedge funds are ridiculous too, because even if this company is a bad company like GameStop is, and it does have somewhat of a failing business model, there's no way that 140% of a company's float should be short. That should not be allowed. And shame on the SEC for allowing things like this to happen, etc. So, and I've seen it in my own account. I know some of you bought the Plymouth Rock and Mountain Valley, placements. And this is Plymouth Rock right here. And you can see it was down a lot today, but it's had this huge run. And I think this is kind of, again, when you look at a stock like this, it has nothing to do with Reddit. And I just think that we're seeing this mass blow off in the market, right? So, and it's nothing against these companies. I own these companies, but it was like, and I still own a little bit of Plymouth Rock, and I bought some of their recent 20-cent financing, but it's like, it's a very small position, but it's just like, this is to me the end game of this financial bubble. This is the consequence of all this cheap money, zero interest rates, giving people stimulus checks, and inflated unemployment checks, which they're then in turn buying these stocks and pumping these stocks in this mass kind of now participation in the markets, similar to 1929 or 1999, 2000, past bubbles, etc. So what did I do today? So obviously we made bounce. The VIX was up a lot today. The stocks I shorted today, I bought some puts, 150s on January 2022, 150s on SD. I think this looks like a toppy chart here. Looks like it's coming out of it. Had a good reversal. Elon Musk tried to pump this stock the other day. You can see there was a big reversal yesterday. That's when I started looking at buying the puts on this. You can see the huge, look at these stocks. Since that bubble bottom, SD has gone from, under $40 to $220. It's ridiculous. And you can see the parabolic blow off here, and then Microsoft, I did today because I think that the cloud business, because of all the stuff that's gone on with, the thing that happened with Parler getting kicked off Amazon servers. I think people are going to use cloud services a lot less. That's where Microsoft's growth all is. Microsoft trades at 40 times earnings, and it's mega expensive. They've just been buying back stock, etc. And you can see, like, again, another kind of parabolic chart. When the parabolic chart ends, who knows, where it's going to end. So I bought the January, again, 2022 200s in Microsoft. And then another stock I shorted is ARK. So ARK is kind of the poster boy for this bubble. You can see this massive, ridiculous move here. I bought the January 2022 hundreds in ARK. And the reason being is ARK owns Tesla, Zoom, SD. It owns all of those bubble stocks. So it's kind of the poster boy for it. So, that's what I wanted to short. So I bought 4 of the ARK 100s. I bought one of the SD 150s, and I bought 3 of the Microsoft 200s. That's what I bought today. So if you want to do that on any bounce coming up, I feel great. But I really believe this scenario that I just gave out of this potential where, let's go back again to GameStop. Let's see what's going on here. Like this, you can look at these things. Like, that's Bed Bath & Beyond, Fizz, Pets. Always a pets.com, isn't there? In a bubble. I don't know what half this crap is. iRobot. It's a bad movie with Will Smith. Sorry if you like that movie, but it's a bad movie. Fossil, and actually after hours, First Majestic Silver is up 30% after hours. So, because that's actually, just so you know, that's the most heavily shorted silver stock. There's some people saying, when are the Reddit traders going to start attacking the shorts on silver? Because silver is the heaviest shorted, commodity right now. So I just think that, look, I don't think these things are huge in hedge funds, but if these hedge funds all of a sudden now have losses and have to start liquidating because they're going to get redemptions, it becomes this kind of, and then remember, a lot of these Reddit investors or smaller investors, they're invested in a margin. It becomes a self-fulfilling prophecy, and we could see something really, really ugly. Now, the VIX was up quite a bit today. you can see it was up huge today to 37. It was up 61%. So, it's tough to recommend puts at these levels here, but I would definitely think on any bounce and the VIX gets back down to, I don't know, the, it gets back down into towards 30 or in the 20s. It looks to me like the VIX is an uptrend. It's never going to go back. This ultra low volatility we saw during this bull market is not coming back. So there you go. I think we're in this uptrend. It looks like we bottomed here in the low 20s. And what happened in the bear market of 2000 was the VIX would get up into the late 30s like this. Market would rally, it'd get back down to the late 20s, and then the market would sell off again. So I think you might have a bounce to get into some of those put positions I've talked about, but I really believe this is almost like subprime with the markets, that these short covering positions by these hedge funds will trigger a mass liquidation, and we could get very ugly at some point. Now we're just off the top right now, so it doesn't really look like like anything at the moment. But I think you have to look at the kind of the inherent risk right now. And we're so overvalued. Like I was starting to think when I started seeing these stocks moving the last week or two, I was like, this feels like the end to me. Like, and I own to something. Like I own some of them. Like I talked about Plymouth Rock. There's a couple of others I own that were not gold companies that were starting to trade parabolic like that. And I was just like, this is the end game, man. This is really it, So anyhow, I guess I'll just leave it at that. And because you can see my computer's getting low on battery here. So yeah. I hope you like this. We're gonna have many more videos. For my paying subscribers and my subscribers, I put this out to everyone because I think this is an important video. The service. We'll have a trial for 2 months on the new service. And then August 1st, April 1st, I'm going to figure out what I'm going to do. I also got some new gold deals. Look at the issue with gold right now is, yes, gold, the GDX, even though gold was only down $8, wasn't really down today. The issue is, as we saw last March, I don't know why it's doing that. There we go. I got it now. I'm going to stop this thing, but yeah, the GDX is kind of near support. And I don't know, it could go lower. So you got to be careful right now. Gold stocks will sell off with the market probably if there is some kind of liquidation event here. So that's why I'm saying raise cash positions, hedge yourself, etc. But the issue with gold is, and I held through that decline last year, is the issue with gold right now is, and I'm going to show you a 10-year chart. You can see what happened here. That's what's going to happen again. So I don't know, maybe the GDX gets down to 25 or something, right? But the issue you're going to get with gold is it's going to have a V-type bottom when it bottoms and come right back. So you're just going to have to you have to be willing to kind of, willing to wait out this next kind of liquidation. So that was it. I hope you enjoyed the video. Again, I hope you like my neon house. Yeah, you can't even see me right now. I'm on 5%. So I'm going to end this and hopefully have more going forward.